in a really tough spot. And again, what investors are going to feel when they open up their 401k statements at the end of March, if this continues, is somewhat painful, because we are in sort of this perfect storm right now of rising interest rates, inflation, and again, supply chain, and then, of course, Ukraine on top of it, which is causing a lot of anxiety, as Mike just talked about.
Absolutely. And just really a tumultuous time for so many reasons. Like you mentioned, you talked briefly about rising inflation. How will the Fed's, the notion that they're likely going to increase rates at some point, do you think that's coming into play here as well?
Well, I really believe it is. In fact, one of the people that sits on the Fed panel, Bullard, said today he thinks they need to take action right away and move rates up at least 1%, that inflation could get completely out of control unless we take drastic action. And what does that mean? Well, we've already seen the prices on almost everything we buy go up significantly, and we'll probably continue to see that. The Fed has got to slow down inflation. There's going to be some short-term pain if they raise interest rates quickly, but they've got to slow that down. That, quite frankly, I believe, and this isn't to discount the difficult situation that people are going to go through in Ukraine, but from a U.S. economic standpoint, that's a much bigger threat than the Ukrainian conflict. I think that will be resolved, hopefully, in a good way over the next few weeks. But inflation is really a problem right now. And Aaron, they're having trouble getting it under control. And in order to get it under control, there's going to be some short-term pain, which in an election year, as you know, sometimes it's hard to get consensus on that.
Absolutely. Obviously, no crystal ball in terms of the stock market. If there was, we would all be very, very wealthy and happy. But what do you think, Joel, needs to happen for things to come to a place of less uncertainty and for the markets to really level out here?
Yeah, I think inflation needs to get under control. I think interest rates have to sell at a point where people feel like, okay, at least I've got some stability. I believe the Ukraine situation will be resolved in the next 4 to 8 weeks. If that even means that we don't do anything, at least we'll have some guidance there. And so I think those are the two things that need to happen really for the markets to settle down. People really need to be, especially if people are within about 5 years of retirement right now, they need to be very, very cognizant of the fact that things have been really well over the last 10 years. The market's done really well. And maybe they should take some chips off the table, because it certainly is not worth the angst that someone feels, especially close to retirement, to give back all those gains.
And for those not close to retirement, ride it out. Is that the message for now?
Yeah, if you're in your 40s, ride it out. Let it go. My son's 32 years old. Just keep plowing money in and leave it alone and don't pay attention. But if you're in retirement or close to retirement, you need to go into this preservation mode where part of your portfolio grows, but most of it is there. It's going to be safe. It's going to provide you an income.
Makes a lot of sense. Always appreciate your insight and expertise. Joel Johnson with Johnson Brunetti, thank you so much.
Thanks, Aaron.